FAANG's All-Stars videos. This is the week where things really start to heat up. We're going to get the start of the FAANG stocks plus a bunch of others. So I'm going to be bringing you all of the earnings charts this earnings season. So be sure to tune in on Zacks.com/YouTube to get all of our videos. But this video is on the FAANG stocks. Now, there's some who say, who cares about FAANG anymore? Nobody cares. It's over. But I don't think it really is. We all still own the FAANG stocks. Even if we sold individual holdings, we own them in the indexes, and they're still key companies, which are going to give us some insight into what is happening out there with the consumer and just the economy in general. I mean, we're all paying attention to who's hiring, who isn't among the FAANG companies, because they're some of the biggest employers. So what is going on with their earnings charts? Who has a good one? Are there any good ones? And which ones look kind of iffy? Let's dive right in and see. Okay, the first stock out of the gate for reporting is going to be Netflix. So I wanted to start with that one. And as you can see, everything was looking, pretty rosy up until 2021. And now we've had the huge sell-off, even here in 2022, year to date, down about 68% on top of the fall from the peak in 2021. But they have managed to put together 3 beats in a row. The street hasn't cared because it's not really about the earnings with Netflix. It is about their spending and, gaining new subscribers. And they've been losing the subscribers, and now they're cutting back on the spending. But I've always wanted Netflix to cut back. I always thought it was kind of crazy, the amount of money that was being thrown around by them with maybe little return. And now they are starting to look at costs and cut back in that area. So a lot of change could be coming at Netflix. Maybe we'll find out some of it on this earnings call. But what about valuations here now? Now, if you liked it in 2021, maybe you really like it here under 200. I mean, we're back to the 2018 levels. PE has come way down. It used to trade around 80 or 90 times. It's trading at 17 times now with a PEG ratio of just 1.2. It almost has a value PEG ratio. So is this juicy here, or is there more problems still to come? That is the question. But us value investors look at something like this, and we do start to see some value because all those valuation metrics we follow have come way down. But the question is, does it have further to fall? So this is one definitely going to be watching this week. Now, the rest of this FAANGs start reporting later, but we're bringing them here. So the first one out is Meta. I still like the stock. I still own it in my own personal portfolio, but as you can see, it's trying to round trip back to 2020. But the shares are as cheap as they've ever been, trading with a forward P of just 14.5 and a PEG ratio of 1.3. So close to being a value on that PEG side, but definitely value on the PE. Year to date, shares down 51%. Now, they only have one miss in the last 8 quarters, which is a pretty good track record for Facebook, because as you can see, those red arrows earlier, pre-pandemic, where they had those 3 misses, they have a history of just kind of missing here and there. So to have that great track record during the pandemic was very good for this company. And now maybe we're starting to see a little bit of the doubt come in now that they're kind of moving over into the metaverse category. So this is going to be definitely one to watch to see if earnings are going to continue to fall. They've already been cut for this year, expected to fall 17%. So this is one that has a lot of uncertainties. Nobody really knows. And then we have the economic conditions on top of it. So I will be watching it as I own it. And this is one definitely to be on your watch list. Then we're going to switch over to Apple, the one everybody owns and loves. Well, look at this chart. No misses still over the last 5 years. So they've returned to their track record of meeting or beating every quarter. Super impressive, especially during the pandemic, supply chain issues, all of that. They've been very good at getting the street on board with what's going on in the underlying business. So they're still able to meet or beat because the analysts are really informed. Now, these shares are down on the year, down 15% right now, up a little bit off those lows for 2022. But that only means they're not that cheap here. PE is still about 25 with a PEG ratio of almost 2. The dividend is yielding only 0.6%. So that's not that great if you're in it for the dividend, but many of you aren't. Still, the sales growth is under 10% now and has been for a little while. Fiscal 2022, only 7.4% on the sales growth side, and 2023 expecting only 5.8%. So it has returned to single digit growth scenario, but it's still on the pricey side, as I mentioned, with that higher PE that doesn't make it a value stock like it was back in 2014, 15, and 16. So what's going to happen with Apple? Can it stay elevated here in these type of market conditions? I don't know, but this is going to be an interesting one to tune into. Then we're going to switch over to Amazon. This one also has an interesting chart. It is coming off that big miss last quarter, that one of their largest misses in the last 5 years. So these shares have really taken a tumble now, year to date down about 32%. And throughout most of the pandemic, other than that first pandemic surge, as you can see, they didn't really go anywhere. So these shares haven't really done much over the last 3 years. If you're a long-term shareholder like I am, we've basically gone nowhere. And you get no dividend with this stock either. PE still sky high because those earnings have been cut. So PE is 214 here with a PEG ratio of 8. And earnings expected to decline 83% here this year on the inflationary pressures. The cost of delivery has gone up, the cost of labor, all of these things in their marketplace, distribution, retail categories are going sky high. So earnings have come down dramatically. But is the worst priced in? Are these shares finally finding a bottom here in 2022? We will see, but everybody's going to be watching this one. Then we're going to see the final FAANG, Alphabet, ticker GOOGL is the one I use. I also own this one. Now, this chart is not reflecting the current split in the shares, 20-to-1 split like Amazon did. So this chart's going to look a little bit different going forward, but for now, it still depicts the beats and the misses. And we're coming off a miss last quarter after all those beats there during the pandemic. Now, Alphabet has never really cared about the meets or the beats and all of that. And it used to have one of the worst track records of the FANGs, but during the pandemic, it did put together that great streak. So now it doesn't look too bad, actually, but it is coming off that red arrow last quarter. So it's making me wonder, are we going to return to the era of they don't care if they meet or beat, and we might see some more red? I don't know. What does it look like on the PE side? So these shares have come down 23% year to date. That's making them cheaper as the earnings aren't looking too bad here, and sales aren't looking too bad either. But the PE's down to 20.5 now, so still hanging out in the 20s, but looking like maybe on another leg down, it could go back into the teens. PEG ratio, though, is what's on the interesting side, just 1.1 here. So almost a value PEG ratio because sales expected to be up 15.7% again in 2022 and up another 15% in 2023. They're still doing mid double digit sales growth, even after all these years, even after the size that it has become. So I don't know how they do it, but they are. But can they continue to do that? That is the question. Will advertising start to slow here? Usually the ads slow when you head into an economic slowdown and recession. Is Alphabet going to see that here? That's one of the big issues. So I'm going to be tuning in as I own it in my own personal portfolio. But as always, like all of the FANGs, they still are must-see stock charts. and earnings calls. So we all will be tuning in for all of these, and it could be a wild ride over the next 2 weeks. So FAANG still does matter, FAANG man as well. We're going to be hearing from some of the other FANGer type stocks like Microsoft as well coming up shortly. So you don't want to miss a single episode of the Earnings All Stars. As I said, you can get them all on Zacks.com/YouTube. Follow me on Twitter. Follow Zacks.com on StockTwits or Twitter. Get all of our earnings content as things are really heating up and maybe aren't as bad as what everybody was expecting. I don't know. The big banks are looking pretty good here and they're not all doom and gloom. So, what will result this week? What else is coming down the pike other than the start of the FANGs? There's a lot. So, be sure to tune in and I'll see you again next time with some more earnings charts.